The markets have been demonstrating strength over the past week. The cradle pattern, which is a strong bullish pattern, produced a close above the T-line, which is a very strong and accurate trend analytical tool. And as we've seen over the past couple of days, they could not close back below the T-line, even though on Friday they sold the market off hard for concerns of the Syrian situation. They closed it back up above the T-line. Just a very simple rule. If you see a candlestick buy signal or pattern that closes above the T-line, you've got to assume that you're in an uptrend as long as they don't close it back below the T-line. Now, is this one index telling us we're in an uptrend? Definitely not. But as fast as we can analyze this with visual analysis, we can analyze the other indexes. The S&P 500 closed up above the T-line with a big bullish engulfing signal. Still trading up, and today it had kind of a what we call a trend kicker signal, which still shows great strength. Plus, it closed above the 50-day moving average, filling this gap a next target, which means we're still probably in an uptrend, especially with stochastics telling us we're in an uptrend. Same analysis for the NASDAQ. We had a flutter kicker signal, which is a very bullish signal, that closed us up above the T-line. Still had concerns about whether the NASDAQ could get through this level, which is apparent that they did today with another trend kicker type signal that tells us that this was not acting as resistance, and this signal right here tells us we're probably in for more upside, which makes this a nice wave 1, wave 2, wave 3, telling us the probabilities are still in our favor that we're in an uptrend that will stay for a while. Being able to analyze what the market conditions are overall allows us to put our money into patterns that are in breakout situations. Here's our fry pan bottom. Here's our breakout area. And notice the type of signal we have in candlesticks that tells us that they're coming up through this breakout area with force. This is what we call our left-right combo, a doji followed by a bullish engulfing signal, which tells us there's probably more upside. If there's more upside, it's telling us the fry pan bottom is breaking out. If the fry pan bottom is breaking out, we know if this is our wave 1, wave 3 could be the same magnitude, which gives us a very good substantial upside. Having this information allows us not only to identify which price moves may be very strong, but we can time it almost to a day as to when we should be in that position. This is not rocket science. This is merely taking the information that the Japanese rice traders have provided us for over 400 years of observing what goes on in investor sentiment and using it to our advantage. That'll be it. We'll see you in the chat rooms.